G'day and welcome to another episode of Perth Property Insider. I'm your host, Jared Mann, and today I'm really excited to have our client and buyer's agent along, Tommy Segoro from Easy Buyers Agents. And the reason I wanted to get him onto an episode is he's really gone about focusing on positive cash flow properties. And I wanted to bring that other perspective because I'm very much normally focusing on how to get growth, how to choose the highest performing suburb for growth. I want to give a more balanced view if you're starting out and you can't afford the higher end properties, or if you are wanting to more focus on cash flow instead of capital growth. There's no one size fits all strategy. And by educating you and exposing you to some of Tommy's thinking, I'm hoping that you can see what fits and what doesn't, and look at creating a strategy that's going to be best for you. And you can also do a thing called pairing, where you might pair a positive cash flow property with a more negative geared growth property, and that way have a more even balanced overall neutral portfolio. So keep that in mind as we get it stuck into things. Let's go inside.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management specialists servicing the whole of Perth. Now, here is your host, Jared Mann.
Hey, Tommy. Great that you come along to the podcast.
Thank you for having me.
I know we have lots of chats ongoingly about the markets and about various clients of ours that you're helping. And I just thought it would be a great idea to get you along today to share some of your knowledge and experience in the market as a buyer's agent. And I'm really excited to have you along.
No, thank you. Thanks for having me. Happy to share. Absolutely.
So what sort of activity are you seeing out there in the market at the moment?
I still see a lot of owner-occupiers being very busy in the market. Investors, obviously, there are investors, but investors being investors, they obviously want to find deals, and it's harder at the moment because you, as an investor, you can never compete with owner-occupiers, right? So I think there are always investors, but generally the ones who are paying for crazy high prices are owner-occupiers. I've spoken to several agents. The ones who are selling in more of lower socio-economy, I think they express the market has kind of slowed down a little bit. But the ones in the owner-occupier sort of suburbs, like medium up suburbs, we're talking, let's say, Woorolgoon, Bedford, just Applecross, those sort of suburbs, they are still selling very, very hot.
One trend I've seen in the lending stats of how much lending's going to investors versus homeowners, and the investors are still only at about 30% of the peak that they were at in the past cycles. So We've got a lot more to go with investors coming back to the market. And I think a lot of our clients especially are still just getting their values back to where they were. And once they have their equity, then they can start looking at doing something and believing in Perth property again. And that's why I'm encouraging them to try to push outside the comfort zone a bit sooner, because the market is going to be much further along by the time they get there. So we're mainly seeing the East Coast investors and not the locals. So are you dealing with many overseas and East Coast?
Yeah. I just signed a couple investors from New South Wales, surprisingly enough. I think they probably see the value, how cheap properties are here in WA. With WA investors, probably they have been burnt maybe in the past. Maybe during the mining boom, they've purchased all these crazy prices.
The top in 2016 or
Yeah, so I think they probably want to buy again, except maybe they're in the negative equity. Who knows?
Well, hopefully they can get into the market while there's still some run ahead. And I think it's going to be 2 to 3 years, but the most gains probably coming in the next 12 to 18 months. What sort of time frame are you thinking with things?
I think so. I think when it comes to property, you can always find deals and values anytime. But generally, I think, because you're right, and the properties that are purchased in 2019 and early 2020, the 200K, if not less, have now all been similar properties nowadays in the same street have been marketed for 240, 250. So straight away, that's 25% more than I've paid in the past. So that kind of thing is probably deter some investors when they look at that.
But I guess it depends on the yield still, because if you're still getting 5 to 6% and the rents are still going up in most areas and will do for some time. So it depends what you're comparing it to, doesn't it? Because I know you got some very sweet deals when things were down.
Yeah,
So your
that's true.
standards
That's
are pretty
true.
high.
Yeah. I think some investors at the moment, at least some of my clients have expressed they just want to wait a bit, in the sense they just want to see what the effect of JobKeeper, being rolled back now, what the effect of that will be in the market. Obviously, we haven't seen much effect just yet, other than people sort of like backing off because of the prices that has gone up so much. But in terms of the confidence, I think it's still pretty strong, just because people can't go anywhere, so they have all this extra cash. Where else, other than maybe crypto, right? They probably just put it in property. So,
well, as I say to people when they ask me, when did I last go on a holiday? And we worked it out the other day. It was September 2019.
Wow.
And we've instead just been upgrading and buying property and, focusing on business and what we can focus on. We do need to get a holiday booked in, by the way, desperately. But when you've got a toddler as well, it's not exactly appealing to spend 3 to 5 hours in the car with them when a half an hour trip to the shops is a big deal. But I guess everyone's saving their money and putting it into, starting to put it into property and other assets.
I think so. I mean, you see, let's say crypto, it's just gone up in value by crazy. I mean, it's just showing that
could
people.
Be another podcast, but not Perth Property Insider anyway. So tell us about your investing so far, because you started when the market was very difficult and you couldn't rely on capital growth from the up cycle. We were still in a down cycle when you were buying your properties. So tell us a bit about your journey so far.
Yeah, well, obviously, I started in 2006, and back then I didn't buy a good asset, so to speak. I just bought anything. People advised me that you should buy property to save tax. Obviously, you know the story. I lost about 50K in 6 years that I hold the property for. And then since then, I was like, maybe property is not for me. But then as I went along, I studied, and it just gave me back the confidence. And I started again, in late 2018, early 2019. And then that's when I bought most of my properties. I think when I started again from that bad experience, I started with a brand new build. So I bought a land in Coburn Central back in 2019, 2018, and then I built new. So that's not too bad. But then since then, I've been sort of looking at other strategies, and then that's when I started applying the cash flow strategy. I read some people who accumulate so many properties and they were buying all these cheap properties. So like back in the days when I first read the book, I was like, there is no way. I've been looking into the market that there are no cheap properties, right? But then 2019, when I went back into the market, I was like, holy moly, well, I saw some 200K, if not less, sort of deals, and I look at the rental vacancy rate and look at the rental price. Yes, it has the rental price itself has gone down, obviously, because it was the downturn. But nonetheless, if you look at the yield, it's still pretty good. So that's when
at the time,
So that's when the light bulb moment kind of light on, and I was like, okay, maybe I should start. So I bought one, and then I went back to my broker, and he was like, oh, you earn extra income. So the bank is willing to just give you the same amount of borrowing power. So I just keep buying. I put in 10% deposit, and then I've been buying since then. Now I'm at a point where I don't have much cash left, in the process of refinancing. Hopefully I can get some equity out and start buying again. So that's really where my journey has been. I quite like.
You added value to some properties along the way as well, didn't you? So what were the various? I know you've got a whole bunch of them you could talk about, but what were some of the ways that you, I guess, how did you find value and then add value?
Like I try to find, let's say, a 4x1 properties, right? I can add a bathroom and the value can go up by 50, 100K. So that's one strategy. Another strategy is just obviously the positive gearing, about it, huge rental yield. I try to find anything 6.5%, if not more. Now it's getting a bit more difficult because of the price, but nonetheless, so back then that's what I was looking for. And at the moment, I quite like the renovation strategy as well, because Yeah, like renovation, I think is a good way for you to create equity. Yeah, so that at the moment I've been looking sort of either renovation or just buy and hold with 6.5% gross yield. Yeah.
And that's the reason I wanted to bring you on, because anyone that says that one strategy suits everyone, I think, is bullshitting. And you've got to start somewhere and also look at the best strategy that's going to suit your situation. So if you don't have that much deposit to get together and you can't afford a negatively geared property per week, well, going and buying a high quality property that is going to outperform is not really the strategy that you can start with, of course. You've got to start somewhere, and that's what I love. I started out in the lower end properties too. Right. So my first property was in Huntingdale, and I did a little letter drop around the suburb, and I dropped my brother off on his bike, and I gave him some flyers, and I said, I'll be back in an hour or two. And this is prior to the days of us having mobile phones.
Right.
So I would just pick him up an hour or two later, and I give him $10 to go to the chicken treat while he waits for me. And he would put it into the houses that were looking the worst on the streets. This is in Huntingdale, my first one was. So then I had one person call me back saying, we need to sell our house real quick, and you say that you can settle quickly, and what price would you offer? And went around, took a look, and I ended up buying it at $189,000, and the bank valued it at $240 straight off the bat. So even a simple strategy like that of just going direct to sellers and finding someone that does need to move on, of course, if they had the time and they could wait and use an agent and go the traditional route, then they would have done that. But they needed a quick sale, and I was there to help them out of that situation. So then when you do a little renovation on top, and I spent, I think, $33,000, and by the time I was finished, some 4 to 5 months later, and it took me a while because the first one, you don't know what you don't know, don't you?
Yeah.
So I think it was worth $320 at the time of finishing, and it's just a great way to, then you can refinance. We kept that one for another 4 or 5 years and waited to the end of the cycle to exit. And when you're beginning out as well, it can be a great way to chunk up money so that you can move into better properties if you wish, or I guess as you've done, keep focusing on the lower end and keep adding your cash flow and getting to a critical point where you are starting to replace some income.
Yeah, 100%. I think what you say there is just a perfect example.
And that can obviously be done at any price point, and it all depends on what your situation is as to where you might choose to focus too. So give me a juicy case study of some other problems that you've solved, because you've been a real problem solver from what I've seen from the sidelines, and you've taken on a few things that I'm like, wow, I probably wouldn't take that on.
Yeah.
So tell us about a few of those.
Yeah. Okay. Well, I think, when people come to me, especially the investors,
it's not to say that what you've done is for everyone, but I just think for those that are prepared to do a bit more work and take on some more problems, there can be more payday for solving things. And again, where I'm at now, I don't want any problems to solve. I'm too busy. I just want to find the highest quality of asset and find the highest quality of tenant and have it in the highest quality of area. And I don't, it's not worth my time to spend it in property when I've got other avenues to get a better return on. And so you've got to weigh it up depending on where you're at. So that's probably the first thing. We're not saying this is for everyone.
Look, I think things fall like, because when people engage me, they engage me coming from the perspective of they are very time poor, right? So first of all, for them to find the deals themselves, everybody can find a deal if you've got the time, right? Because you have to browse through thousands of properties and find the deal that way. But so first of all, they are time poor. So that's probably the one very big problem that I help them with. But secondly, is someone with confidence. A lot of my investors, they came to me and they said, have you got other people in your network, Tommy, that can help me with this and that? And I was like, yeah. So I think it's the access to the network as well.
Yeah.
Things for like renovation. I mean, you mentioned about, obviously you are time poor, you can't be bothered doing renovation and all that. But in my case, with my investors, everything is managed. I get them in touch with people who can do the project. All we're doing from the investment point of view, we just have to cater for the numbers.
Yeah, exactly. If you want a project manager, allow for it. If you want to pay a bit more of a premium to give it to one company that does everything and they can give you a fixed price, and it's more hassle running around and getting electrician, the plumber, this and that, and the kitchen maker, and but perhaps you pay a little bit more, but you know what you're getting, and it's easier.
Coming back to the question of the problems that answer. So obviously, it's if you're time poor, or if you just need someone to handhold, right, so that you have the confidence to buy. I got to be honest with you that if you come to me with very big budget, let's say you want to build a 15-story apartment, it's not a project that I would take on. Put it that way. But if you're a small-time investor, you want to look at adding more into your portfolio, you probably want to do just a small flipping project. That kind of stuff is what I've helped people with.
Yeah, and you've probably changed your time horizon a fair bit too, as if I have, and I'm more interested in longer-term holding of properties and not as much the short term of flipping things. So how did you come to changing that in your mind?
Yeah, I mean, a lot of my investors, I only have one specific investor who's looking for flipping. Generally, they want to accumulate, right? The renovation really is a strategy to create equity, knowing that if they want to cash in, they can always cash in anytime.
It gives you the buffer in case something happens, and then you can cover your sale costs and your entry costs. And if you create at least 10%, then you've got those covered. And if you create 20%, the market goes down 10%, then you can walk away, as a break even at any time. So it just gives you breathing room, doesn't it?
That's right. Yeah. I think the one who's looking for specifically for like flipping is they are in the older age range, so they were like, well, there is no use for me to keep accumulating, right? But generally, like the younger ones, they prefer to accumulate. Yeah.
And especially with the runway we've got ahead of 2 to 3 years, and you can never exactly time when a market's going to slow down and hit its peak, but you don't need to time if you make 30-40% over the next 2 to 3 years, and then it comes back 10%, and you ride the waves in and out, and then you're insulated. You've made your money back. You can refinance it back out to do something else with, buy another property. It's just nice when investors have a longer term view to these things and don't try to make it all by betting on black.
Yeah.
So is there any other problems, or have your renovations have solved various problems, haven't they? Problems with properties and...
Yeah, so I think, renovation is more like you create equity. So I think if you want to find, especially in this current market, where you want to find equity, I think renovation is just a great way of doing that. A lot of people, I hate to say this, but like when market was down, nobody wants to buy. Well, it was actually the best time to buy, right?
Yes.
But now that market is going up and up, that's when people want to buy. But then if you're not careful, then you can easily overpay. And I think renovation is probably one of those ways where you can actually create equity.
At least we can be more confident in the end selling price of what you're creating now as well. Because when the market was going down, you might factor in a resale of X amount. But by the time you come to get there, unless you bought it really, really well, the value you add can be taken away in the meantime. It's harder to renovate and do any strategy when the market's still dropping by a lot. But then there was that sweet spot where you were buying stuff where the market was more going sideways and not and stable. And if you're adding a lot of value, then you can be still getting ahead in a quiet market when it's going sideways.
Yeah, because obviously, renovation makes the house sort of looks new again, and that attracts.
Increases value, increases your rent, attracts a better quality of tenant, which is the thing that is often not spoken about. And people often ask us, why won't you manage my property, Jared? And we're like, it does need to meet a minimum standard for us. It has to be clean, well presented, well maintained.
Yeah.
And we find if those basics aren't there, and some others, like we prefer properties, well, we insist that we have air conditioning, and we
Right.
insist that it obviously meets the compliance for renting and a lot of the basic stuff. But when we don't have that, whenever we took one on, it's like we'd always inevitably that would be the tenant we'd be going to court for. So we just don't manage them now unless the owner's prepared to get them that place. So how important, I guess, is a property manager in your team? Because I know you've managed your own properties just like I have. And God, I've got some horror stories from when I manage my personal properties, because you just get too close to the tenant situation. And I had one, and I hope you don't mind me sharing because I've never shared it on a podcast before, but I was managing my own property and the tenant was behind in rent and they weren't exactly treating the property that well. And so I allowed them out of their lease because they were wanting to break lease, and because they said that their son had died. And I was like feeling really sorry for them and got them some flowers and allowed them out of the lease, excused the rent that they had to pay. And I never even thought twice that they weren't telling me the truth. And then I got a call from the next door neighbour one day saying that the past tenants had come by to collect their mail from the mailbox, and Jared, you know, that their son that you thought had died, he's running around the front yard right now. And it was just very disheartening as to when you get close to your tenants and you're not objective to what's going on. And it's a more extreme example, of course, but happened to me. Then from that point onwards, even now when I have all my property managers, I get them to manage my properties, and I don't want to have that close relationship with a tenant, and I just want to keep them arm's length. So how did you go with managing your own, and what's the difference you found, I guess, in coming to us as a client over the last few years?
Yeah. Well, I think for me, I'm pretty good in terms of distancing myself emotionally. You know, what I'm lacking is time. Like when I engage you, I've got 3 properties, obviously, with you, and the kind of report you produce, right? The follow-ups and all that. I look at the first property condition report that you produce. I'm like, there is no way if I'm managing my own property, I can produce something like that, right? But it's very important because if you have to go to insurance, they would want to see that, right?
Yeah.
And the fact that I can have a professional.
And if we ever have to go to court as well, it's just,
that's right.
You know, here's the evidence. And as soon as the tenant sees it again, how it was to begin with, it's what keeps us out of court, because they know not to challenge. They wouldn't bother challenging it because it's it's not black and white. It's in colour for them to see. So yeah, simple things, but makes a difference.
Absolutely. I think the biggest thing is obviously just time. Initially, I was having that naive thinking that, well, why would I pay someone, $2,000 annually? That's just for one property. If I have 10, it will be 20 grand. But then now I look at the amount of time that is taken to manage a property. I was like, even if I pay myself, every time I do property condition report, even if I pay myself, right?
Yeah,
it's just not worth the stress,
especially when it's tax deductible. And, you can get 30 to 50% back from the tax man too. I guess we've spoken a bit about the cash flow kind of strategy and also renovating. Is there a investing formula you'd suggest for someone that's starting out?
That's a really good question, because I've got few investors in my clientele who are first timers. One of them was a 21-year-old. And we bought a property that is already tenanted. So positive cash flow property, again, is cheap property that has potential value add, is already tenanted. So I think for someone starting out, I would suggest something that is safe. I've got another investor who was engaging me because she was looking at And
buying tenants can actually be a good idea, because it immediately stops 70% of the market who are the home buyers who are overpaying for things, usually from even looking at the property. So I was never afraid of tenanted properties too, because you can come in and solve, if there's a tenant issue as well, we can come in and solve that. And look, it might take, 2, 3, 4 months to solve the tenant issue. But if you get 30,000 off in your price and it costs us $5,000 by the time we're all done to solve it and get them out, and we might have a bit of lost rent in the meantime. I'm talking about bigger problems with the tenant. You can obviously go in your due diligence and ask for the ledger and their payment history and see what you're getting yourself in for. And you'd be surprised how many investors don't even ask for those things before making an offer. And it's critical in my mind to know exactly what you're buying with this tenant. And you can ask for the routine inspections and the ledger. The ledger's the key thing, because that shows, whenever a tenant has gone into arrears or ever been served with a breach notice. So, yeah, I love that you purchased that one tenanted, and it's a good idea to keep on the radar for people.
Yeah. I think the only downside is especially if they sign during the moratorium period.
Yes.
The rent was very low.
Yeah.
But nonetheless, at least the tenant's already there. It's already tenanted. You don't have to worry. Because I think as a first timer, sometimes you have these worries. Initially, these clients of mine, they were like, "Oh, how easy is it, Tommy, to get a tenant?" I was like, "Well, I show you the vacancy rate, but still, right? It's just numbers. You just don't know, every property is different. Knowing that it's already tenanted."
Well, because the other thing we can do is, if it's vacant, we can obviously put some clauses in to allow us to show the property during the settlement period, and permission to we can use the agent's photos if we get permission in the contract too. And then very often than not, we've got a tenant within a couple of days of settlement to move in, instead of a couple of weeks that it might otherwise take. So that's something else that buyers should keep in mind.
Absolutely. And I think what you said is great, because I've been dealing with you and your company, and those sort of advice from the tenancy point of view is just priceless.
Pay for ourselves before we get started, ideally. So why have you chosen to focus on cash flow? Because it's been a conscious choice of yours, and it's good to see you doing it well.
Yeah, well, I think for me, obviously, because I came from a bad experience. This is just my opinion, my observation, right? Property is a game where if you can run with it for a long time, you will always win.
Yeah, exactly.
Always, right?
Power of compounding, and you go through the cycles, and it's crazy what can happen over 30 years when you just run a basic spreadsheet and extrapolate it out. But yeah, where people fall down is if at some point in your little spreadsheet you have to sell, and it's the worst time in the market to do so. And it breaks my heart when I've had to do this for various clients of ours, when we've exhausted every other possibility. We've tried to refinance, lower their interest rates. We've increased the rent as much as possible. We've added some value to try to get equity up and get rent up, and then still they're not. The critical thing is when you don't have a buffer, that's where people probably go really astray. Something happens, they might lose their job or have a series of misfortunes happen to them. And then when they don't have the buffer, difficult decisions at difficult times, that's pretty much the recipe for investing disaster. So it's been all too common, hasn't it?
That's right. I think with cash, people sell obviously with different motivations. Some of them are maybe motivated because financially they have to. Maybe they bought a negatively geared property, but some people maybe just get scared. They might be thinking, "Oh, market's going to go down again." But if you have a positive cash flow property, at least you're not looking at your property just all negatives. At least there are some positives in it. So that helps psychologically. That helps, because sometimes you want to sell, you'll be like, "Oh, but that property gives me $200 a week."
Well, half the time, believe it or not, I spend a lot of my time talking our clients out of selling if it's not justified and they don't have a good reason to.
Right.
Because something can happen, or they get a bit of maintenance to do, and they're like, "Oh, the property's been costing me a bit to maintain lately. I haven't seen any growth in 2 years. I'm going to sell it." But little do they know we've got the boom around the corner.
That's right.
And it's always hard to predict these things, and we obviously thought it was going to happen a lot sooner, and got delayed, and then finally kicked on with COVID being the catalyst, but not necessarily the cause. So I hadn't thought about that psychology element, because that's really important, isn't it? Because I think the stat is something like 80% of property investors or thereabouts only have less than 2 properties. I think the stat is it's really high anyway. I actually wrote it down the other day. I'll find it while we're talking. But you have to ask, well, why don't people own more than 2, or certainly own more than 1? And because 1's not really going to set you up. It's not going to give you enough, even when you extrapolate that forward with the power of compounding. So I think if you can keep moving forward and keep positive about your properties, then it can be a big difference for some people.
Yeah, 100%. Like I've got this particular client of mine. Initially, in the past, he was just doing build, rent out, right? Build new and then rent it out. But now, since he's been engaging me, I've purchased sort of like 5 or 6 for him, and he's now moving into that strategy as well, because he's got more than 20 now, right? And he reckons with 80% deposit, he's getting between 5 to 10K net. Well, before tax, but net as in you've paid all the property management fee, council rates and all that. So 5 to 10, and if you have 20 of them, that's 200K, right? That's 200K cash flow, and you can just keep buying that way. So
there's many paths to that same end outcome of replacing your income, and you've just got to work out which path is for you and execute, because where people, I think, fall down is they're not executing on either strategy. They're just buying one, sitting on their hands, getting potentially scared or upset by what they're doing, not really getting results in any one way. And then they might sell it after 5 years just before the boom comes. And classic tale of, I just found the stats actually, so you'd be blown away. 71% have one property and 19% have 2 properties. So together, it's like 92% odd have less than 2 properties.
Wow.
92%. And it drops off rapidly from there. So only 5.8% have 3.
Right.
4, there's 2% have 4. And then 6 or more, there's only less than 1% have 6 or more.
Wow.
All property investors in Australia. 1%. Wow. So anything that gets you to building a portfolio is what see you much better off down the road when the compounding has its time to work. And it's not always about number either. It's about, if your end goal is to replace your income, there's lots of ways you can do it. So you do need the numbers when you've got the small cash flow contributions though.
Yeah, no, that's true. That's true. I think like for me personally, I've got a goal of, by the time I retire, I just want to have minimum of 10 properties, tenanted out at $300 a week.
See, I've swung the other way of more, I'm focusing on quality and just growing 4 super high quality assets, but it's a different strategy to yours.
Yeah. I think for me, because I need the passive income, because I'm always weary of, because I've seen people who are very good at what they're doing in their job while they were young, right? But as they grow old, they just get replaced by the younger.
Yeah, because you're in IT, aren't you? As your other world that you're in before you got into buyer's agency.
Yeah, that's right. So I'm just weary that at least I have to be able to make $100,000 a year just to pay for my day-to-day living expenses. That's really the only reason I'm getting into the cash flow game.
Yeah, well, I just interviewed Lacey Philippich, which has got a really awesome book called Money School. So you'll have to listen to that episode when it comes out, because she's all about the financial education to replace your income and financial independence and being time rich. So go back and check out that episode, listeners, if you haven't already, because it's a really good one. But I guess what are some of the other mistakes you've seen investors make along the way?
The biggest one, I think, they are just focusing solely on capital growth, right? It's almost like this. I want to open a burger store because it cost me $3 to make a burger. I can sell it for $15. That's 5-fold, right? But then they don't consider everything else that comes with opening up a store, right? All the running costs, the staff and everything. I think it's the same with property. I think if you're just looking at capital growth, it's just one aspect of property. But like you said, many people are not able to hold until they can realize the equity because of the other things that come with it. It can be so many things. Even their personal relationship is important, right? What happens if let's say you have to split from your partner, but also the running costs of the property, right? The council rates, and that what has killed me in the past is because I was planning for a holiday, everything is set, right? And then here comes the council rate, $2,000, and then the annual water rate, $1,000. And I'm like, oh my gosh, where can I get the money from? So this kind of thing affects you psychologically. And then the maintenance, as the property gets old, you have to maintain them, and all of them need money. So I think if you're just focusing solely on capital growth, it is very dangerous because yes, well, it will happen. You just don't know when. And until that happens, you just have to be able to to hold. So that would be the first biggest mistake I've seen so many buyers, that make, including myself in the past. And also I think the second one is just buying in the areas that they know. As a property buyer, I mean, it's only natural that you ask your friends and families where to buy, but then you ask people who just don't know any better. So like in my case, in the past, I've always been advised to just buy in Canningvale, Wilson, Bentley, Kennington. That's it. And I'm like, is that all? And every time I got clients now, I can tell straight away. They would just ask me a direct question. Oh, what do you think of this particular suburb? And I can tell straight away it's one of those suburbs that are just so popular. In terms of jargon wise, but they never consider other areas that can bring value and profit. So I think those probably are the two biggest mistakes that I've seen, including myself, have made.
And I think on the first one about focusing too heavily on growth, you've got to, I think, focus on your situation first and understand that, and then choose the strategy and the property to suit.
That's right.
Because there's no one size fits all. It's like I'd meet people that have got very little experience and very little capital trying to do a big development, and it's just insane to me that they're drawn towards the sexiness of a development, and when they haven't even done a rear subdivision or a duplex before. So start with the basics, whatever strategy, and surround yourself with people to execute can always be another great way to not make mistakes.
100%. I mean, I've got clients who have a lot of money, right? Even though if they lose on a couple of deals, they're fine financially. But then in my opinion, if you don't have to lose money, why should you?
Okay, so what strategies, I guess, are you able to help investors with? Because we've danced across a few, but it'd be great to get a bit of a summary and as to how you can help people with your buyer's agency, and tell us a bit about what you're doing with people.
Sure. Well, I suppose I can tell you straight up. Obviously, I've mentioned this before. If you come to me with, you ask me to do a 15-story apartments, that's not something I can help you with. But if you're a small-time investor, right? Buy, hold, positive gearing, renovation, just a small scale projects, retain, subdivide, that kind of thing, I can help. The biggest thing I think from my perspective is how I can help is to find you a really quality, I suppose, profitable property deals, because I'm not a buyer's agent who get paid by the seller. I'm a buyer's agent who get paid by the buyer to find them property deals. So I'm really going around. I came from a IT background as well, so I'm very analytical in the way I present information and things like that to my clients. But and anything, a lot of strategies that I've applied. Airbnb is another one, for example. I just got this client who came back for the second one now because his first one is making very great, like 4,000 a month or something like that through Airbnb. So just different strategies, as long as it's a small scale sort of project.
Okay, awesome. Well, thanks so much for coming on. Might have to get you back again sometime and see what you're up to. And you're always doing interesting things and helping people get great deals. So it'd be good to chat again.
No, thank you, Jared. I really appreciate bringing me on. Really appreciate it. Yeah, thank you. Have a good day. Bye.